the black hole of AI. SpaceX and IPOs is sucking all of the oxygen out of the room. It's just too much uncertainty for most investors. Are they going to allocate to crypto when there's a 50-50 chance of a negative regulatory shock in the next 2 months? Or are they just going to buy AI stocks that hit new all-time highs every day?
As long as Micron and other AI stocks trade like meme coins with explosive, unprecedented growth, it's going to be hard to attract liquidity to crypto.
If we look at the digital asset treasury companies, they've purchased half of what they did last month. And then, unfortunately, the ETFs broke their 2-month streak, and now we're back to negative outflows again.
Hype has done very well. Tron has done very well. Zcash has done very well. I actually expect that will persist as people rotate in part out of the majors into these new idiosyncratic areas.
All of us who are fundamentally oriented people have been waiting for this time for many years. They're looking forward to the day when people will start looking at fundamentals, and that's something that's going to drive price action more than before.
Nothing said on inflection point is a recommendation to buy or sell securities, tokens, or any other assets, nor does it constitute a solicitation or offer to invest in any fund, product, or financial instrument. This podcast is for informational purposes only. The views and opinions expressed by hosts and guests are their own and do not necessarily reflect the official positions or views of their respective employers or affiliates. Hosts and guests may hold positions in companies, funds, tokens, or projects discussed. Hey everyone, welcome back to Inflection Point. I'm joined as always by David, Michael, and Matt. Hey guys, how are you doing?
Hey,
Doing
Rich.
okay.
Guys,
It's brutal out there, but excited to be on the pod.
Yeah, lovely. Like as we're recording this, I'm looking at the BTC chart, and we've just hit the 67K mark. We might reach below. There's been this question for the past couple of weeks if the bottom is in, and I don't know, maybe those odds are looking at 50-50 right now. How you feeling, Matt? I know you talk about this a lot.
Yeah, well, I don't know if we're going to trace below 60K. We'll have to see. But the sentiment obviously is difficult in this market. I think there are a couple of things going on. One is the black hole of AI. SpaceX and IPOs is sucking all of the oxygen out of the room. That's definitely a piece of it. Two, I think crypto is coming to grips with the fact that the Clarity Act is unlikely to pass. And so as we wait for that moment to get past that, it's just too much uncertainty to allocate. I think crypto is becoming a contrarian investment. It used to be a momentum driven investment, which sort of rides along on narrative and vibes. Now we're becoming a contrarian investment that looks for fundamentals. I don't know. I think it's going to be tough sledding for a few more weeks until we get the Clarity Act behind us.
That's interesting that you say that. So you think it's unlikely that clarity would pass?
I think it's possible. I think it's possible. But if you look at the poly market odds, they're now down right around 50%. The insiders in DC that I talk to are more pessimistic than that. I was just listening to a panel where two insiders put the odds between 5% and 30%. They seem pretty connected. There's increasing tension between the GOP and the Trump administration. There's continued tension between Democrats and the Trump administration. We're getting closer to the midterms. It's just not a spectacular lineup. It could still happen. At this point, I think it would be a positive surprise. But the more important thing is I think it's just too much uncertainty for most investors. Are they going to allocate to crypto when there's a 50-50 chance of a negative regulatory shock in the next 2 months? Or are they just going to buy AI stocks that hit new all-time highs every day? I think they're pushing the easy button of just buy the AI stocks, holding off on allocating new capital. And the only people who are allocating capital in crypto are looking for the idiosyncratic projects like Hype that have strong fundamentals, and the money is rotating either into there or out and into AI stocks.
Yeah, I agree. I think the market factor here, we're just out of favor. I think it happened many times, and these things come in and out. Will eventually come back. But to Matt's point, you have AI and all the derivatives, right? So there's AI, there's compute, there's memory, there's energy, everything that is related to the AI theme. There's massive interest for these things. Maybe one thing here and there, defense, prediction markets, and Perps, right? Hyperliquid is doing awesome, and there are a few crypto tokens that are finding product market fit and have the right tokenomics that are doing great. But I think crypto in general is a little bit out of favor. One stat that I follow every week, and I think I said it a couple of times here, is that if you look at, like, for example, Bitcoin trading, spot trading activity as a proxy to how much interest there is in Bitcoin and maybe even crypto more generally, we are renewing multi-year lows. I think just a few days ago, Bitcoin spot volumes on a 7-day moving average basis was the lowest since like October 2023. That's like since before the spot ETFs launched. If you look at the CME, which is a place where I look for like demand for leverage, and especially in the more mainstream segment, the CME basis is under 5% for the 30-day constant maturity on a 30-day constant maturity basis, which is also very low. I mean, very few times in the past 3 to 4 years we were there. I think we're just a little bit out of favor. We know these things shift. Maybe we need to wait for these 3 giant IPOs to come out and maybe get all the unlocks and all of that, and then attention will shift back. But I guess for now, we'll probably just going to continue to chop.
As long as Micron and other AI stocks trade like meme coins, just like with explosive, unprecedented growth, it's going to be hard to attract liquidity to crypto, which usually had a monopoly over explosive growth. And so I think what we're seeing right now is a lot of interest in AI. A lot of people that want asymmetric upside think that the place to get it is in the AI stocks, and they're not wrong right now. We'll see what happens after the 3 IPOs this year. I think it is relevant from a macro discussion, even with respect to crypto, to be talking about these 3 IPOs and what they're doing potentially to the market, and what they portend thereafter. But for now, I think it's just a rough regulatory climate. I think the news is not particularly great, as you guys have said. I am still more bullish on Clarity passing than you are, Matt. I'm still optimistic. I haven't really seen any news to make me move away from my opinions over the last couple of weeks that Clarity has a greater than not chance of passing. So unless there's some real news that comes out that persuades me otherwise, I think it's still headed in the right direction. But without Clarity, or at least with the, like you said, Matt, to your point, which is very well taken, regardless of whether Clarity passes or not, the fact that Clarity is still not clearly going to pass is keeping capital on the sidelines. And for as long as there's indecision on whether or not Clarity can pass, I think capital is not going to be flowing into crypto as much as we had hoped.
Yeah, for sure.
Let's assume Clarity passes. Do you think that would be enough to change the, let's say, trajectory of the market? Would that take us away from this 70 to 80K price range Bitcoin is in, or would all the other things going on still overwhelm?
I think you mean 60 to 80K. No, I don't think it alone. But maybe it's necessary but not sufficient, I think, is the way I would consider it. I do think it's keeping institutional capital on the sidelines. Again, that question, do you want to allocate when there's a 50-50 chance of a big negative regulatory event? Put that into AI world. Imagine there was a 50-50 chance of like harsh government restrictions on AI and new model releases. I think that would stunt the flow of capital into that market as well. So I think it's necessary but not sufficient. I think you need to get past these IPOs. I think you need more progress on stablecoins and tokenization. I think the new crop of winning crypto assets will probably be different than the old crop of assets. I do think you're seeing a rotation or a maturation or a shift in the market. But I do think we need to get through clarity before sort of the we turn the page to the next part of the year.
Yeah, I do. I mean, we're talking about AI sucking the energy out of the room, and here I'm just going to pull up on screen a little tangible examples of this. So if you look at the digital asset treasury companies, they've purchased half of what they did last month, and then unfortunately the ETFs broke their 2-month streak, and now we're back to negative outflows again, which is, I don't know. I tend to look at ETF, BTC ETF inflows and outflows as my sentiment gauge. It's been my new sentiment gauge since they launched in 2024. And again, not a promising sign here. And then we also have, just looking at the whale balances, and obviously some of this will include some of the larger institutions, but whales have largely stopped accumulating and are still adding towards the sell pressure. And there's this regulatory overhang that you mentioned, Matt. But then also, if we just look at the month of May, where I did a 10-day rolling correlation to Nasdaq, S&P 500, and gold, right? And pretty similar correlations with all, but it kind of looks flat. But mind you, this is between 1 and -1. So that in the middle here, we see it's weak correlations and then high correlated in the middle of the month. And the problem with this was that the high correlation came when the rest of the market was facing a downturn. And then the low correlation came when the rest of the market was in an uptrend. So the diversification benefits of Bitcoin tend to be out of favor. Like for the last month, and it has instances of this. It's actually sometimes it can be negative to add to your portfolio, depending on what the makeup is, the rest of your assets are. And then I also looked at Bitcoin's correlation to other assets, and we talked about hype last week, and we briefly mentioned it again this week. And this chart is showing that on a 60-day rolling correlation window, more crypto native assets, ETH, Solana, Uniswap, they have a higher correlation to Bitcoin. And then when Bitcoin goes down, we're looking at the market right now. It's below 2, Solana's below 80, whereas Hype, VVV, which is an AI, a private AI chatbot, and also with a crypto token, and Cards, which is real world collectibles. These assets are not only all up year to date, but they're also not correlated to Bitcoin like the rest of the market. So still providing that diversification hedge, while also giving an upside, taking over that sharp ratio that maybe Bitcoin was known for being a standout provider of. And it's interesting because I've been waiting for a long time for the market to kind of bifurcate, because I did want owning multiple crypto assets to diversify the portfolio, and it's happening now. But unfortunately, it's happening with Bitcoin's in a downtrend. But it's still, I don't know, another sign of the maturation of the market, and maybe of Bitcoin too.
I think though, like this snapshot, while informative, Mark, is a little bit it's a little bit misleading, right? Because Hype has been doing some episodic big things lately. This VVV is sort of brand new. It's got a lot of interest. It's equivalent of comparing, Bitcoin and ETH and Sol to a brand new token launch and saying, "Oh, wow, these are not correlated." Like they will become correlated over time, I suspect, like all cryptos.
Ooh, interesting. Go ahead, David. I think David and I may have a different view, but go ahead, David.
Yeah, I guess maybe it's a hope, but I hope they do not, because the interesting thing about things like VVV, let's use just Hype as the foremost example, is that it has a very different value accrual mechanism. And I know Matt has been saying this, I'm sure with the Hype ETF launch. When you talk to an investor about Hype, they can understand it like they understand a company, maybe an early stage company, maybe a growth stage company, but there's a revenue component that they can model. There's a net income that will translate into buy pressure for the asset. So it's very much like looking at a company, while Bitcoin is very much looking like a global macro asset, global macro commodity. And I would say that things like Ether are somewhere in between. That's the hard part in crypto valuations, that we don't know exactly where to place ETH. We know it's somewhere in between these two things, but we don't know exactly where. But I hope that the market starts to differentiate pure commodities from pure cash flow generating assets. The middle will remain muddled. I agree with that. That's a big valuation open question that we'll have to answer. But I hope that the extremes will get more differentiated.
Yeah, I think we definitely will see them more differentiated. I think hype is a good example. I agree because the value capture mechanism gives it a different way of approaching value. It also services non-crypto assets. A significant part of its trading revenue is ex-crypto. I think it's unlikely to have a high correlation with Bitcoin to the extent that it overlaps from a fundamental perspective. There's some degree of crypto-wide regulation that would impact it, but I think it's going to be a pretty idiosyncratic performer, and I suspect we're going to see more idiosyncratic crypto assets in the future rather than less. In fact, I was looking at like a 1 month heat map of the returns, and all the majors were down, but there were isolated crypto assets that have done very well. Hype has done very well. Near has done very well. Stellar has done very well. Tron has done very well. What Zcash has done very
Yeah.
well. These idiosyncratic drivers, I think, are doing well. I actually expect that will persist as people rotate in part out of the majors into these new idiosyncratic areas. So at least for the foreseeable future, I think the correlations will be relatively low.
To be clear, I think that the hype disentangling from Bitcoin will continue for the foreseeable future. I hope that it starts to trade apart from Bitcoin. But hype is just a protocol, right? It's a better run protocol than most, and it is a very unique value prop. But there are other protocols that have tokens that should, on a fundamental basis, have traded apart from Bitcoin over the last 5 years. I'm perennially frustrated with Uni token that it has never really broken out from just trading exactly in line with Bitcoin, and with exactly in line with Ether, when it has a totally unique value prop, and it has, I think, more characteristics that look more like a business than a blockchain, and yet it still trades largely in line with, or historically has, with the majors. So I'm not giving up hope on that. I think the market needs a lot of education on the uniqueness of Hyperliquid and other assets that that can be modeled more like businesses than blockchains. But I don't see any reason why over time right now the market is going to look at Hyperliquid or other unique new protocols any different than they have in the past.
Right. I mean, I think the argument would be the forcing function on value stocks is that the revenue and valuations just get too low, right? That's why value stocks eventually bottom and find a floor and be contrarian investments and go up. I think the difference between Hype and Uniswap, they're both very interesting protocols, but the value capture mechanism in Hype is so complete that you get this forcing function evaluation much sooner than you do on something like Uni, where the value capture mechanism is improving over time, and I think could continue to prove over time, and I suspect is undervalued by the market, but is yet more of a leaky bucket than it is in the Hyperliquid ecosystem.
Yeah, and I think you have a good point, Mike, in that all of us who are fundamentally oriented people have been waiting for this time for many years, and it's been kind of elusive. I'm sure Mark and all his friends at Blockworks Research, they're looking forward to the day when people will start looking at fundamentals, and that's something that's going to drive price action more than before. I totally understand that this is something that has been a long time coming, and kind of always a future, a long-term future thing. Yeah, I don't know. Hopefully, we're in a tipping point. I think Hyperliquid somehow struck a nerve. Today, there's just a report on the Wall Street Journal talking about Hyperliquid as kind of the new trend in Wall Street, and folks are looking. I mean, there is a confluence of factors here, right? There's the 24/7 markets for trading things like oil on weekends, the pre-IPO markets. Now maybe with the HIP4, the prediction markets part. I don't know. We'll see how these things move. I feel like Hyperliquid crossed the chasm, and maybe they will take some of the other assets with them, and people will start to get interested in these other interesting things that exist in crypto as well. But yeah, let's see. I agree with you. It's been a long time coming.
I mean, Hyperliquid is the one big bright spot in an otherwise cloudy, gray area of crypto right now. So I don't want to imply that I'm not very bullish on Hyperliquid. I am. I think what it's doing is phenomenal. I do think though that ultimately uh, it's really it's less about Hyperliquid and more about just the market. Can the market really understand the differentiated value prop of Hyperliquid?
100%.
I do think, something like Uni maybe for now should trade like a beta asset, like how I would see Coinbase doing, because higher prices leads to more trading, higher fees, especially when meme coins come around with higher take spread, and then maybe something like Hype. And this is what I'm going to say for other protocols too. But something like Hype starts to differentiate because of this, real world assets, tokenized asset, and it has a diversified revenue stream that a lot of other crypto protocols don't have. Not to mention it, not to mention HIP3, HIP4, prediction markets. Matt's tweet about it becoming a neobank. Similar to the Robinhood model again. So that kind of differentiation, and I do think another sector which is getting some love, but is also very hard to price fundamentally, is privacy. That's why we've seen like Railgun and Zcash and a lot of these other protocols really rise on it, and VVV as well. And it's weird if you can compare them to some of their counterparts. Maybe you compare Zcash or Litecoin, kind of the same thing, and then you see what the premium is. Now we're starting to kind of maybe have some kind of value, like some kind of way to calculate what the monetary premium on privacy is with the rise of this narrative. So I think it's interesting from that perspective, but maybe it's still a little bit too early to actually put some robust, statistically significant numbers behind it. David,
I wanted to talk about.
Go ahead, Mike.
I've wanted to talk about Zcash for a while now, actually, and privacy. I think this is definitely something that we are looking at, and something that's really quite fascinating. And in part because institutions have been demanding for a while now that they need more privacy layers within crypto. But to make here's a simple way of thinking about. Here's how I think about Zcash. Why did Bitcoin not become a primarily a system of payments? Why did it shift to a system of value, store of value? And I think one of the main reasons is like they didn't have a privacy layer. If you're going to be really a payments network, you need some sort of privacy, or else it's going to be pretty easy to track where you are and what you spend money on. Zcash comes in a very it has a very similar tokenomics as Bitcoin, but is a privacy network. And so I think that this could be the next big. It's already becoming, but I think it could be the next big meta in crypto. I think it's solving a real problem, not only in crypto but in payments. That said, there are regulatory questions, right? On the one hand, it's ironic that institutions are calling the loudest, in my experience, for privacy, and yet on the other hand, they are the most reticent to do anything that regulators will say is not above board. And regulators certainly do not want untraceable money. So I think there's definitely an interesting debate that we will see on this in the coming months and years.
Yeah, the one interesting thing is I feel like interest in things like Zcash is coming from a different place, very different place from where the Hyperliquid interest is coming from, right? The Hyperliquid is definitely getting mainstream with ETFs and all those things. I don't know if maybe it's a little bit too much or my bubble or the circles I'm in, but I think a lot of the Zcash interest is coming from very crypto native people, like even like VCs and folks expressing exactly what Michael is saying, right? That maybe this is the next big meta. Yeah, we'll see. The main question I have here is whether privacy is a feature that a blockchain should have, or if it's the product, right? Or whether it is the main thing. And I guess we'll see if other blockchains will be able to include privacy features. What is the path dependency on that? So yeah, definitely an interesting topic. I agree. I think it will continue to gain importance, at least as a narrative point.
Can I just add the one thing? If you look 2 years ago at Hyperliquid, it was also most evangelized by the crypto natives.
Yeah.
Right now it's broken into the mainstream. So most of the protocols, networks, tokens that we love and we talk about every day originally were pushed by the cypherpunk crypto native segment of the market.
Yeah, I think that's right. Look, I think as I've said this before, but I think as suit corners like me drag Bitcoin into the light, it makes more room for privacy assets. And Zcash is tiny. Is it $10 billion right now? Bitcoin's $1.3 trillion. Could it be 10% the size of Bitcoin to serve that sort of pirate corner of the crypto universe? That doesn't seem absurd. That's a lot bigger than it is today, right? So you have to think that Bitcoin will continue to move into these institutional channels, right? The largest holders are going to be MicroStrategy and BlackRock. That's going to make more and more space, I think, for things like Zcash. I actually think it's as simple as that. I think the corporate privacy payments service is going to be done on sort of the quasi corporate chains that are emergent, but I think Zcash, Monero, that space, I'm generally bullish because I think it's fraction of the total sort of store value money market in Bitcoin, in crypto, is smaller than it probably natively should be. Maybe it should be 5%, maybe it should be 10%, probably shouldn't be 1%, which is closer to where it is today.
Yeah, I mean, I'm not a Zcash hater, but I'm gonna say some stuff. I think Bitcoin is made it to a store of value instead of cash because it's just too expensive to be cash. It was too inefficient of a network for it to be actual used like any kind of fiat currency around the world. And I do think that if it were to hit that scale, Zcash would encounter the same problems too, and which is why we're still, even to this day, looking at more like a private store of value. And then I see, a lot of popularity with, for instance, the Cantor network, where their privacy it's not like it's cryptographic privacy. It's kind of like, as they would say, trust me, bro, privacy, right? It's just not everybody can see it. It's only a select few. And I mean, in some ways, Bitcoin did have that with the Lightning Network, where maybe only the hops would see it along the way. But I digress. So with this like pseudo privacy, I think obviously the institutions want that, even if it is a trusted third party, because they're very much used to doing that. And so I don't see why, if for instance, Aztec, an Ethereum solution, or maybe a solution on Solana, not only from the protocol itself, but a layer on top of it, if that can add privacy, why you can wrap your BTC, or if you believe ETH is a store of value, or you name your asset, if you can use a third-party privacy protocol, a decentralized privacy protocol, why not just you choose your own store of value asset? Why do we need Zcash?
Yeah, no, I think that's exactly the point I was saying about privacy being a feature or the actual product. I would go even further than that. Maybe privacy is something that is going to be solved at the wallet level and not necessarily at the blockchain level, right? There's a bunch of wallet products that provide this type of functionality today. I think Railgun is one example. There's another one called Hinkle. So these are basically privacies that you can even include a KYC layer, and once you pass that KYC filter, you are within this private network. So maybe it's not even going to happen at the blockchain level. There's a lot of questions here. I'm 100% sure that privacy is going to be a theme, how it's going to be solved and how the market is going to adopt it, I think that question is still very much open. I agree with you.
Yeah. My gut is the people who care about AML, KYC, and such aren't going to migrate to Zcash. I don't think that's the lane it's choosing. I think it's choosing the cypherpunk. That's not an option. Privacy at the core sort of lane, as opposed to privacy as a product solution, which is maybe more subject to regulatory capture and investigation. I could be wrong, but that's my sense of where the movement in the community is towards these privacy originalist assets, privacy at the core assets.
I think the wallet solutions are very interesting. I'm glad you brought those up, David. And that could be the solution to privacy. I think there needs to be, though, blockchains like Zcash and other privacy networks out there that provide, Zcash uses ZK snarks. It's permissionless privacy. I haven't seen any wallet solutions as far as I know that you're not still trusting some sort of central intermediary to safeguard your privacy. So now, that said, permissionless privacy is difficult because at least in a permission privacy layer, you can AML KYC all the participants and then anonymize them thereafter. In a permissionless privacy regime, you're not going to be able to have AML KYC guarantees. So that's going to be the challenge.
Nice. David, I know Anchorage put out a piece. We were talking about BTC. Let me see if I can pull it up on the screen here. I thought it was very interesting looking at the options market and how it's changed and relative to, I guess, the S&P 500. What is the insights? What are the takeaways from this?
Awesome that we're covering this. No, for sure. So this was our first long form piece. The idea here is to dig deeper into whatever trends we find interesting, either on crypto as an asset class or as a technology. This first one is very focused on Bitcoin options. It's a long paper. I would invite everybody to read it at the Anchorage website, to go Anchorage Resources and Research. You're going to find it there. But basically, maybe a couple of things to highlight here, and the chart you have on Mark shows this very well, which is basically the reason why everybody's talking about Bitcoin options today, or a lot of folks in the market are paying attention to options. Options are growing, and I think they're still somewhat underlooked as a piece of as part of the Bitcoin market. The top panel here on the chart you are showing, for those who are listening, I'll describe it in a little bit more detail, but it shows the open interest for Deribit and IBIT options. And this goes like over the past 5 years, and you can see that this market has literally 10x over the past 4 years or so. And even over the past 2 years, it has probably 5 or 6x in a big way, driven by Deribit that has been growing, but also on the back of IBIT options. These have been the two main engines here. Just to give you a sense, today open interest in options sits at around $60 billion. And just to compare, if you add all the Bitcoin perps, right? Binance, Bybit, OKX, Hyperliquid, all of them. If you add all the dated future contracts, things like the CME, if you add all of the open interest from those Bitcoin futures contracts, you're talking about something around $40 to $45 billion. So options are already bigger than futures in terms of open interest, which is not crazy to think about. We all know here that in traditional markets, equity options markets are like 5 to 10 times bigger than futures. Today in crypto, options are like 20 to maybe 30% bigger than futures. So if that ratio holds, we probably still have room to grow even further. But this is becoming a relevant market. And I think a lot of folks should start to pay attention to this, not only because options are a great instrument for you to express views that you can only do through this, but also because just from reading the tape and reading the markets, these options flows are starting to become interesting, and they're starting to impact the Bitcoin spot price in a way that they haven't just a year or so ago. But the main theme of the report is on covered call selling, and we're talking about how a lot of folks are paying attention to this, reeling back to the point we were discussing at the beginning of the podcast. especially when the Bitcoin price section is down or flat. One strategy that makes a lot of sense is just to sell options against an already existing Bitcoin spot position. And if that option is not assigned, you basically just collect the premium. So it's kind of a way for you to collect a synthetic yield type of stuff on Bitcoin. And what we did in the report is to do a comprehensive analysis just to try to show what these yields look like, what are the main factors, how consistent they are, why they are there, what are the structural reasons. In many years ago, when was that, Matt? Maybe 4 or 5 years ago, Matt and I published one of those Bitcoin in a portfolio type of reports, just trying to show what happens to a portfolio when you add a certain amount of Bitcoin and you vary a few parameters. What I tried to do here was the equivalent of that for options using covered call selling, which is the most simple and straightforward strategy. Just to, I feel like I've been talking for too long, but just to finish here on, here you can basically see what is the volatility risk premium on Bitcoin, which is the light purple area here, versus S&P and the QQQ. So what you can see is that Bitcoin has 2 to 3 times more volatility risk premium versus these traditional assets, meaning that even though Bitcoin is volatile, the options market prices it even higher than that. So if you're a patient investor and if you're operating in the safe corridor here, if you're choosing the right parameters, doing the right risk management, you can harvest that premium. I was actually surprised at how consistent and meaningful these yields can be if you apply relatively simple risk parameters. So yeah, that's basically the gist of the report. Take a look at anchorage.com. You can go to resources and research, and you can find more about it.
I would just add it's a must read. You should read it. I think this is a huge part of the crypto market. This is the best paper I read on it. So highly recommended.
I'll third it. Question I have for you, David, because I had the opposite takeaway from your paper, which is that retail is going to struggle with this, given the fact that I think you used the phrase throughout, picking up pennies in front of a steamroller, and like one of the key takeaways I had was that over time most people selling call options are not actually beating the market for Bitcoin. Can you explain that a little bit more?
Yeah, no, 100%. And the collecting pennies in front of a steamroller is definitely a thing for covered call selling. You're literally selling volatility. So you're collecting these premiums, but every once in a while, and this once in a while means whenever the price of the underlying Bitcoin rises significantly and suddenly, you incur large losses. So it's kind of an insurance writing type of strategy. The point I want to highlight is this is an active management strategy. So you probably need someone who understands these things, who is very capable doing it. You probably need a desk that has good execution too. So like this is not a strategy that is that simple to implement. And that's why like firms like Bitwise, right? Bitwise has Matt can talk more about that, but Gordon and his team, they have a whole alpha strategies team that implements these types of strategies for investors. So I fully agree with you. It's not something that everybody should do, and I try to put this in the paper in a few different sections. It's something that you have to be careful. You need to know what are the deltas, what are the expiries, what are the regions you want to play in. You probably need to have some good market regime filter just to try to understand more or less whether Bitcoin is likely to rip higher significantly or not. And if it does, you need to have exit mechanisms that allow you to leave before this things rip too much and incurring large losses. Fully agree with you. It's not a simple strategy. The paper is long. It's a 45-page paper, which kind of reflects how many factors are at play and how complex these strategies can be.
I also had a follow-up question. With the popularity of covered call strategies, I thought it was interesting that actually since the start of the year there was a huge dip off. And I also wanted to ask. That's part one. Is like why are we seeing a reduction in it even though it's supposedly getting more popular now? Is it just from liquidations? But then also secondly, We're looking at here, Anchorage shares is a long-term average rate of around 65% versus the S&P, which is around 37%. For a healthy structure of the Bitcoin market, do we want this to remain around the long-term average, or should this be trending lower as it is now anyway?
It's a great question. And I think it reflects a little bit the maturation of the Bitcoin options market. Because in the beginning, if you looked at Deribit, let's say 2 years ago or so, basically the option market was a bunch of degens buying out of the money call options and just trying to get a symmetric upside. That was basically what the Bitcoin market's options market was. Over time, we started to see some more sophisticated strategies. So folks looking for downside protection, folks looking for like yield strategies, some pure volatility trading, calendar spread, like all the gamut of sophisticated option strategies you can find. And I would say that as that happens, you're probably going to see more of a balance between calls and puts, because puts starts to be used for some of these more sophisticated strategies. But to your point, Mark, if you look in the SPY or QQQ markets, it's usually 2/3 puts and 1/3 calls. The Bitcoin market is basically the opposite. It's 2/3 calls and 1/3 puts. So we have probably a long way to go to drift into market average. I honestly don't think we'll get there anytime soon, because I still think that this chase for Bitcoin asymmetric upside will continue to exist, right? As Bitcoin is still an emerging asset, but I think we'll continue to see this number drifting. But I don't think we're going to get anywhere near what we have for the QQQ or SPY options. These markets are obviously very mature. They're in the trillions of dollars in terms of open interest each. So they're still a long, long road for us to get there.
Okay, nice. And my last thing that I'll just touch on is I find it's also very interesting that we're comparing the volatility and the ratio of a single asset Bitcoin to that of 500 assets or 1,000 assets, right? Sometimes it's kind of misleading. It kind of makes Bitcoin seem a lot more volatile. But then again, when I look at the S&P 500, it's probably the most volatile it's ever been in its history for an extended, like over the past, let's just say since COVID. So I will note that there are assets within the S&P 500 that themselves are more volatile than Bitcoin, and maybe when looking at premiums, that's a more clean comparison there.
100%. The thing I would highlight, though, is that what we were seeing in that chart is the difference between the volatility implied by the options market and the actual volatility realized. So even, I mean, a lot of these traditional assets, you are right. I actually had an earlier version of that chart, including like Tesla and NVIDIA. And you would see some of those volatility risk premiums a little higher than the index, but they still don't match Bitcoin's. The question here is a lot what the options market is pricing versus actually what is getting realized versus the actual volatility level of the underlying asset. Those are slightly different things.
100%.
But related.
If we have no other comments on Bitcoin or the market, I wanted to bring up something that I think rarely, and I don't know if we've ever really talked about on the show before in any kind of detail, and that's Ethereum. And specifically, there's been a lot of discussion surrounding, let's call it the exodus from the Ethereum Foundation. So a few prominent names have actually left the Ethereum Foundation this year, just in the past few months. And obviously, price isn't doing well. ETH has a high beta to Bitcoin, but even outside of that, even the past couple of years, it's down on a 5-year, 6-year time horizon. There are a lot of memes comparing the price of Ethereum since 2020 to the price of bananas and showing you that Ethereum is underperforming massively. I'll just pull up on stage here because I kind of wanted to discuss this first. The profiles who have left the Ethereum Foundation in the past few months. And we've had some big names, including the executive director, Tomas, who only stayed for 1 year in his role. And then probably a couple of the others is Tim Baiko, who maybe some of us know, who is a very prominent member of the Ethereum Foundation, very outspoken, a lot of conferences, a lot of the messaging came through him. But, how are you guys thinking about this? Maybe Matt, you can kick it off there if you're having these discussions at all. I don't know if anybody's interested in this.
in terms of the exodus, the
Yes.
Ethereum Foundation exodus. I think ETH is going through something that it goes through periodically, which is sort of re-evaluating what it is and what it wants to be in the world. This is not the first time that this has happened with Ethereum, and every time it happens, you see the price suffer until it finds its new footing. I think that's what's happening here, right? We had a very aggressive, market-oriented version of the Ethereum Foundation. Now we have a version that's focused on crops and wants to be a smaller player in the space. I do think this is slowing down interest from the more crypto expert part of the world. It isn't slowing down interest from traditional financial investors who just want to allocate broadly to the space. This is more inside baseball than they care. But I think for people who are crypto native or quasi crypto native, this sort of crisis of confidence and decision about what ETH wants to be when it grows up is definitely weighing on the market.
Do we think this focus on crops? I mean, I feel like it's always been, yeah, Matt.
Well, I mean, I actually think ETH has a fundamental decision to make, which is whether it's trying to be money or whether it's trying to be a revenue generating chain. And the community consensus seems to be that it wants to be money. That will lead to a number of very specific design decisions going forward, and I think there are people who are pro that and skeptical of that. It could make the other decision, which is the decision that ultimately block space won't be fully commoditized, and there'll be sort of rent-seeking capabilities on specific parts of block space. With the rise of stablecoins and tokenization, it could be a revenue-focused chain. But that would lead to very different design decisions and attract a very different set of investors. And I think it's a pretty fundamental choice with long-term ramifications. I'm not sure the ETH community is having that discussion head on in the way I would love for it to have it head on. But I think that's much more important to me than what's going on at the Ethereum Foundation, which, as Vitalik said, owns 16 basis points of ETH. It's really, is it going after this or is it going after that? It can't really go after both. And it leads to very different design decisions that lead to very different outcomes. And I think until it figures that out, I think it's going to be stumbling around.
I fully agree with Matt. Could not agree more. I think in the short term, ETH will probably vary just with these idiosyncratic macro factors. But in the long run, I think the value accrual mechanism needs to be clearer. I would even go beyond. If Ethereum wants to be money, they probably need to get away from the Bitcoin shadow, because I don't think Ethereum can become commodity money like Bitcoin is. It's just a whole different asset. Maybe it's just some sort of quasi money commodity. Maybe it's a financial asset like a treasury is. But I think they need to get away and separate themselves. There's a few narratives I see here and there, to be honest, things like ultrasound money, right? Yeah, we're commodity money, we're like Bitcoin, but we have lower issuance. I believe some of these things don't make a ton of sense, to be honest. If they want to go the money route, I think they need to figure out exactly what being money in an Ethereum context means. And it should ideally be something different from what it means to be money in a Bitcoin context, which is this censorship resistant, very strong monetary policy, sound money type of asset. There's other types of monetary assets. There's other types of commodities that are interesting that are not necessarily money. And I think Ethereum needs to look more into those type of assets than to Bitcoin.
Yeah. It's also wild to me that Ethereum wants to look up at Bitcoin being money instead of looking down at the others, where it's the leader on stablecoins and tokenization. It's like Michael Jordan wanting to play baseball. Very strange to me. But I agree with David. It needs to define what it means to do that. If that is the direction it wants to go. I'm not sure it's the right direction, but if that's the direction it wants to go.
I've always been opposed and confused by the ultrasound money thesis. It never made sense to me for a couple of reasons. One, Ethereum is not a money platform necessarily. It is a operating system, a decentralized operating system. Two is framing it that way, I think, can justify 100x multiple on price to earnings basis, as opposed to just a a payments platform or a money platform. Never made sense to me. Third is ETH being money seems to be like the least cool thing about ETH. Like the Ethereum being a tokenization platform, a protocol platform, a marketplace for like infinite amounts of different applications. That is what is exciting about Ethereum. So I think the ultrasound money thesis was not the right direction, and I think it's already died to a large extent. Another point is this: when assessing what is going on at the Ethereum Foundation, just like assessing what's going on at any blockchain's foundation, the first question you have to answer is how important should a foundation be to a blockchain? And I think it's a nuanced question or it requires a nuanced assessment because I think different protocols or different networks at different stages in maturation rely in greater or lesser degrees on their foundation. So newer blockchains like Hyperliquid, I think the foundation needs to play an outsized role. Ethereum now is coming up on 10 years. I long for the day where the Ethereum Foundation doesn't really matter at all. And I actually think they're doing a great job to ensure that is a reality. Now, if they don't matter that much to the future trajectory of the blockchain, then the best thing they can do is just not make bad news. Right? That's like their number one goal. Don't make bad news. Now, that doesn't mean that they can avoid it at all times. The recent departures from the Ethereum Foundation, those are going to make news no matter what. I think that news would have been a lot less toxic if Ethereum's ETH's price action had been a little bit better over the last couple of years. So I think this really reflects more of a stagnant price than it does any real fears that the certain members that have left the Ethereum Foundation are going to result in Ethereum as a blockchain being less usable, less valuable, less of Ethereum. I just don't see any individuals, even Vitalik, playing as much of a role. One individual playing as much of an outsized role in Ethereum as the commentary suggests. I don't know if you guys agree or disagree with that, but
I agree with it. I think it's good that the EF is actively trying to diminish their role, because in recent years I have not necessarily agreed with their positions. And I've spoken with some members within the Ethereum Foundation this year, last year, and it seems like the core members were leaning a little bit more towards crops and ossification versus thinking about it maybe a labs entity would, or if this was a business where we're looking at management, we're looking at execution. Like, for instance, if I was in EF, something I would have prioritized a long time ago is account abstraction. One of the reasons why I started using Hyperliquid and never switched away from it is because it was one-click trade. I didn't have this pop-down box where I have to sign the transaction, then accept it, and then they removed all of that complexity away, and it just made it seem like a regular app, which is what I knew that everybody thought the end game for these protocols would be. And Ethereum did have different ERCs to this effect, but it never actually materialized. And I think it's because the EF did have an outsized role prior in the history of this asset, and that was never on their priority list. So I'm looking forward to maybe handing over the reins to the likes of maybe an Etherealize or even like a Bitwise, and not like necessarily as one kingmaker, but all of these different institutions that are already in the space, that are probably very knowledgeable and have this go-to-market experience and are talking to investors and clients and know what they want. I'm looking forward for them to having a more outsized impact on the market.
Yeah, I love that. Agree with that.
The one thing I would add here, fully agree with that, Mark, and I would even add the DATs, right? You can think of SharpLink and Bitmine. Like, a lot of these companies could have a role to play in being kind of stewards of Bitcoin as an asset, especially in the crypto TradFi intersection. So yeah, fully agree with that.
Yep. I'm going to have to hop. I appreciate you guys, but we should talk more Ethereum.
Okay,
Bye, Matt.
100%. See you,
Thank you,
Matt.
Matt.
Mistakes were made, right? Over the last couple of years, at the highest levels of Ethereum. I think what will go down as probably the biggest mistake was the L2 thesis. L2s cannibalized the L1 to a large extent. And as a result, it moved a lot of the otherwise bustling ecosystem of engineers and founders to build L2s and to move their products to L2s. Now, that makes sense only in a world where the L2s are paying more money to the Ethereum L1 than the L1 would have otherwise received if those apps lived on the L1. That didn't happen. In fact, they did the opposite. With proto-dank sharding, they essentially made it almost free, not free, but very cheap for L2s to settle on the L1. I think Vitalik even acknowledged that that was a mistake recently, which I think was a big revelation. And since then, you've seen a lot of investment, a lot of interest flow out of the L2 area. Will it go back to the L1 or will it go to other blockchains? I think that is a big question.
That's interesting. I definitely think we'll have a deeper conversation on this, especially when Matt is back too, because I wrote a report a couple months ago about why L2s were Ethereum's biggest failure and also its biggest success. So I'd love to dive into that a little bit more.
That's something.
Depends on how you define success there, but I'd like to hear that. Yeah, absolutely.
yeah, it's definitely not based on price, right? It is a little bit more of a longer term play. But yeah, so we're coming up on time there. Any last thoughts, Michael, David, you want to leave the listeners with?
I'm what I'm looking at this week is to see the fallout of strategies Bitcoin sells, and what sort of commentary there's going to continue to be around that. I think they've gotten some pretty bad press recently on selling. I think the market obviously did not like it. So I want to see how that turns out, because that could definitely impact their strategy. If the market punishes them anymore for it, that could definitely impact their strategy going forward in a big way.
Yeah, I think we could. There's probably two things that have been calling my attention over the past few days. One is the MSTR sale. I think the market is a little bit exaggerating, and we can talk about that. We actually kind of discussed it because this is not something entirely new. Michael Saylor had already suggested that would be some sales, right? And we did a good chunk of an episode, maybe 2 or 3 weeks ago, exactly on that. This 32 Bitcoin sale for $2.5 million was a very small glimpse and maybe a signal or maybe a message towards that direction. That's definitely one thing. The other thing I think maybe we should spend more time on maybe next week is on the CFTC effectively opening the door for Perps contracts, futures Perps in the US. They did it in two ways. One was to allow Kalshi to have perpetual futures contracts in the US, something still pending regulatory approval but ongoing. And the other would be to allow a Coinbase affiliate to start offering access to international options and Perps futures contracts to domestic investors. I think that was a big deal. We're all here excited about Perps. I think it's a very central part, for example, of Hyperliquid story. But beyond that, right, Perps are a new financial instrument that I think allows you to do some very interesting things. They have been forbidden in the US for a long time. And we just now saw maybe the beginning of the approval of Perps in the US, which I think is a very exciting development too.
Yeah, 100%. Those two CFTC announcements were huge. We didn't get enough time to discuss it today, but definitely tune in next week for that. So, David, I'm going to put you on the spot here and have you wrap up the show. Tell our audience to, follow and do all that good stuff. So take it away.
Awesome. Thank you, everyone. I hope you had a good time. I hope you had as much fun listening to this as we have doing these chats. If you find value in this inflection point episodes, hit subscribe and share this with everyone you think could find value from this. Thank you very much, and we'll see you next weekend.
Awesome. Cheers, everyone.